So again, we're trading every Thursday. We want to hold it for a week. Maybe we want to even put in some take profits as well. So if we are up like 100% or something, we probably want to take that profit. And if we drop by, quite a bit, then maybe we want to take a stop loss as well, right? Maybe like a 50% stop loss or 100% take profit, something like that. We'll want to hold it for a week. We'll want to do something that's like maybe 2 or 3 or 4 weeks out in terms of expiry dates. We want to buy at the money, and we want to buy the tickers that are up the most over the past 3 months from this list of tickers I'm going to give you. Okay, make a strategy like that. What? Okay, so there's my list of tickers. I'm using Whisper Flow as my dictation, so I'm going to take that from here, stick that in here, and there's our strategy that I described. And there's our tickers that we did some research on. If you guys want to see how this all looks, let's expand this out a bit. Okay, so this is kind of my description that I just talked out. And then here's a list of tickers, and I'm going to hit go. And let's see what happens. Right, and then, sorry, I don't know how to pronounce your name, by the way. Shriram, is that how you pronounce it? You're saying here, the trade signal has to happen within 90 minutes of market open. XSP is a proxy index for SPX. Yeah, I'm aware of what XSP is. It's a smaller SPX. So we actually ran yours. So this one's running here. You can see the AI is going, generating all this stuff. Oh, awesome. Great. I'm glad I got your name right. Thank you. Perfect. This is the strategy that generated. So here's your XSP opening range option strategy. Right, so here's what the AI created. So it says, this strategy monitors the first 15 minutes of XSP using 5-minute bars to build an opening range. If the next bar closes outside that opening range by at least 10 cents and the VIX is above 15, it places an at-the-money debit vertical spread in the breakout direction. The strategy works by watching these conditions. Collect the first 3 5-minute bars to define the opening high and low. After the opening range, require a close beyond the high, plus 10 cents for bullish, or below the low, minus 10 cents for bearish. VIX must be above 15 to allow trading. When a valid break is found, it opens an at-the-money debit vertical, call spread for an upside break, put spread for a downside break. Risk management features include limiting premium exposure to a configurable percent of account. Default is 5%. Using a small wing on the spread to limit capital, and an automatic 30% profit target to close spreads. The strategy will not open duplicate spreads in the same direction and logs important events for transparency. Does that sound kind of what you'd want? Does that sound about right? Yeah, you can add the signal has to be triggered both for SPY and XSP to enter the position for more robust results. Okay, let's see what happens here. I don't know if we have data on XSP, so we might have to only rely on SPY. I'm going to specify here that XSP is an index. I don't want to think that XSP is like some ticker or something. So I'm going to type that in here. We're going to refine it, and I'm going to go and hit that. This will go ahead and make those changes that you requested. It did a bunch of stuff here already. Okay, the AI also created my bot. So here's the bot that it created for me, the one that I'm thinking about using today. The strategy buys short-dated call options on the strongest ticker from a user-provided list once per week on Thursday market open. It selects a symbol that has risen the most over the past 3 months, buys an at-the-money or slightly in-the-money call that expires roughly 2 to 4 weeks out, and then holds the option for about 1 week. The strategy works by monitoring these conditions. It ranks the tickers by 3-month performance and chooses a top performer on Thursday. It selects a call option with at least 2 weeks until expiry, typically 2 to 4 weeks, and prefers at the money or slightly in the money strikes. It sizes each trade to use a configurable portion of the account, default 5 to 10%, and will try the next symbol if the top one is too expensive. Perfect. It buys on Thursday and sells the option after 1 week or earlier if 100% profit or a 50% loss is reached. Risk management features include position sizing, defaults to a small percentage of the account to avoid concentrated bets, an automatic stop loss, default 50% premium, and a take profit at 100%. The bot limits the number of simultaneous underlying symbols, default is 1, to avoid overexposure, and logs all the trade decisions for transparency. Very cool. Okay, and then this is the flow chart if you guys want to see what it looks like. Okay, so we go, is Thursday, yes. Rank the top symbols, any top symbols for options, yes. Find at the money, option 2 to 4 weeks to expiry, valid option found and budget allows, yes. Place buy limit order for option, store option trade details, and then evaluate open positions. And then are there open option positions to check? No, yes. Check position P&L, TP. Okay, and then exit conditions met, place trade. Okay, cool. This looks right. So basically what I asked for. So I'm going to hit backtest. Let's see how this thing would have done. So backtest, if you guys don't know what backtesting is, basically I want to see how this performed if we had ran it from March of 2024 until September of 2025. Let's see how it would have done. So I'm going to hit backtest and we'll see how that performs. Okay. In the meantime, let's take a look at the one that we created for you, the XSP one. I give it these differences here. It's looking for both XSP and SPY. Requires VIX to be above a certain number. Very cool. Require SPY confirm and small clarity logging improvements. The rest of the original logic. Okay, I think this is pretty good. Why don't we back test this and let's see how this one would have done too. So run back test. Okay. So we got both of these back testing. Let's see what the results are. Oh my goodness. Can't stop coughing today. All right. Which one do you guys think is going to do better? We got one here that's trading options on a few different tickers, buying basically call options and around at the money or in the money, and holding those for a week. And then we have another one here that's trading XSP and SPY, or I guess it's just trading options on XSP, going up or down. Let's see how those do. Those things running here. I'm going to check. It's downloading some data. Polygon rate limit reached. I feel like I'm going to have to pay Polygon because it's going to take a while to download. So you know what? While this is going, I'm going to pay Polygon so that we can have faster data here. So I'm going to go to Polygon. And I'm going to go to their dashboard and I'm going to get these plan. Where's this plan? Options. I do have the options plan. What the hell? Why is it taking so long? Unlimited API calls. Why is it going so slow then? What the hell? I am paying you guys. You should be doing this faster. Maybe I didn't give them the right API key. Let me stop this because this is going to take too long without this. So I have my Polygon API key. Let's see. I'm paying them. We have 2 years of data. This should be good. And make sure that Yeah, I'm giving them a Polygon API key.